Good morning, everybody. Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, ask them in the comments of the live feed. If you need any more advice, join the official Intuit Quickbooks SMB community on Facebook, where accountants and business experts are on hand 24/7. During the live session, we will be running a poll, so please do engage with it, and I'll reveal the results at the end. So who am I? My name is Mandeep Ubhi. I'm one of the directors of Morgan Reach Chartered Certified Accountants. I'm a qualified accountant, have been so for the last 15 years, a long time now. And my experience is in the small business sector. So I've been helping clients with small businesses from preparing accounts, self-assessment returns, payroll, VAT, offering tax advice, and the like. So we're here to help you. And the small business is at the heart of what we do. So as small businesses grow, it gives us, it almost encourages us, to do more and provide more value for them. So Morgan Reach itself is a local and national practice. So we're based in London, in Birmingham, and in Manchester as well. We've been around for about 15 years, and we've seen all sorts of challenges over the time, and especially with self-assessment returns. And we're here to help you get your tax returns right and in on time. So who should be submitting a self-assessment return? So as everybody knows, the deadline is actually today, the 31st of January, but HMRC have actually offered an extension to everybody. So you do have an extra 1 month's grace. So the deadline has been extended to the end of February. But that may not be, viable for everybody. So it might not be financially beneficial for you to submit it by the 28th of February. But nevertheless, that extension is there, and they have said it is penalty free, but they may still charge you additional interest over that time. That said, don't leave it to the last minute to get your return in. So the sooner you can either submit the return yourself or get the details over to your accountant, the better it will be for you. So people that need to fill in a self-assessment return, that is generally self-employed people who run their own businesses, people with side hustles and earning extra money on the side. So for example, if you've got a rental property, if you've got additional earnings from a car boot sale, any landlords, overseas landlords, and those type of people. So where there is an undeclared income, which is separate from your salary, then you do need to be declaring your tax return. Sorry, just give me a second. Right. So if you already have an accountant, your next steps are to have a chat with them, in terms of, so if you haven't already submitted your return, what you should be doing is calling up your accountant, have a chat with them. They'll send through probably a questionnaire, see what you need to, see what actually needs to be completed on the tax return. And then they'll ask you to send in as much evidence and documentation over to them as possible. Best advice that I can offer is get organized as early as possible. Start using the apps such as Quickbooks. They will actually help you to organize your income and expenditure over time, and you'll be able to make sure that you're not in a last minute panic. We have a lot of clients who actually, as soon as a tax return deadline is, the year has finished, the financial year, their data is already on hand, so we can get their returns done as soon as possible. And then they've got 9 months to actually plan for the amount of tax they potentially need to pay. So, there's not a last minute panic. Oh my God, my tax bill is £5,000. Where do I find that money from? No, they've got 9 months to actually plan that in advance. So, yeah, get your data in as soon as possible. If you don't have an accountant, what should your next steps be? We always tell our clients, you don't actually need an accountant to submit your own tax return. But equally, you're not going to learn how to do it in a day. So wherever you can, do get some advice. If your return is fairly easy, you can submit it yourself as long as you've got your HMRC gateway logins. It is fairly straightforward for you to be able to do it yourself. However, having said that, that does come with a caveat. We have had clients who have tried to submit their own returns, be it just very, very simple returns, and they have ended up with a penalty from HMRC, which then becomes very stressful for the client, and it becomes very expensive as well to actually try and resolve that situation. So yes, by all means, HMRC give you the tools to do it yourself, but it comes with a healthy warning. To be able to submit your return, as I mentioned, you do need to be registered on the government gateway. So if you don't have logins, if you haven't told HMRC that you've got undeclared income, it will take you 3 to 4 weeks to actually get those logins from HMRC. And it's not, that information won't just be available straight away when you register. It does take 2 to 3 weeks. So give yourself plenty of time to get that login, to get those login details, and to get yourself registered. But having said that, if this is the first time you're doing a return, don't panic. Because HMRC will give you 3 months. So if it's the first time you're registering, they'll give you 3 months, regardless of the deadline. You'll have an extra 3 months to actually submit that return in. So do make sure you look out for those details in the post if you are registering. Also, guard those details with your life. It is like your credit card details, so make sure you keep those details secure and safe. You don't want to be just leaving them around for people to grab your data. Some of the information that you should be collecting as well on an annual basis, if you have a job, so you should have your P60 data. If you've left a job recently, then it should be your P45. And if you have your own business, then you should be collecting your income, expenses. And if you're contributing into a personal pension from a bank, get your interest rates, tax certificates. If you've sold any assets, make sure you're recording, or at least have a record of the potential gain you've made on the asset. So, whether that could be a painting, whether that's an expensive car, or even a property, like a second property. There'll be potential capital gains tax to be paid on that. So make sure you have that data on hand, keep it in a separate file, on your emails, so that all that data is there in one area, and you're not trying to hunt for it at the end as a last minute panic. Some people just try and bury their head in the sand and they do nothing if they're not registered yet. And they think, oh, it's fine, HMRC won't check on me, I'm a little fish. That's not the case. HMRC have a system called Connect. They can actually see all of your financial data, so how many houses you have, how many wives you have, how many children go to which private school, which loans you have outstanding, whether you have car finance, so that type of stuff. They are able to see all of that. And if they want to, they can delve deeper into your records, and even have people undercover monitoring your business, monitoring your your activities if needed. So be warned. Don't do nothing. Speak to an accountant, get some advice, and then you'll be in the best position going forwards. Okay, so we have Ralph on Twitter who sent in the first question. So his question is: most of the figures for my self-assessment are now prepared. However, I found a bit of income during that period that doesn't seem to correlate to any of my invoices or clients. What should I do? Thank you for the question, Ralph. So if you've got income which isn't related to any of your invoicing, it may be something, for example, a client has potentially paid you by mistake, or if a client's paid you too much, then that money, I'm assuming you're potentially not returning that to the client because you don't know who it is, but you do actually need to raise an additional invoice in your system so that you are actually recording that income. So even though you don't know who it potentially relates to, you'll have to create a generic invoice on your system, and maybe other income under the other income section. Record that, and then you should be fine, because at the end of the day, it is additional income that has been earned, and you do need to actually declare that income. So, it could, even if, for example, you're getting referral fees or something like that from somebody, for referring a client, you've referred a client to somebody else and they've given you a referral fee for that, then you do actually need to show that income on your returns. So I hope that helps. Thank you very much, Ralph, and thanks for engaging. On to our next question. We have Nikki on Facebook Messenger. And her question is: I'm not registered as a sole trader or have a business set up. However, during 2021, I did earn some income outside of my regular employment while I was on furlough. Do I have to fill out a self-assessment? If yes, how do I go about it? Thank you for the question, Nikki. So first question is, have you earned more than £1,000 of income? If you haven't, HMRC have a grace allowance almost. So if the income is under £1,000, you don't need to declare that income. But if it is over £1,000, and yes, while you were on furlough, people were doing all sorts of things, to try and bring in some extra income. So first step is, yes, you would need to register with HMRC. So go onto the .gov.uk website, register for self-assessment. That process takes about 2 to 3 weeks for your login details to come in, and then have while that data is while your login details are on the way from HMRC, you can actually record all of your details on an Excel spreadsheet. So capture your income, capture your expenses, and then at least it will make the process easier once those login details arrive. If you're not comfortable with doing that, speak to an accountant, and they will be able to get you registered, and they'll be able to help you through the process and guide you step by step on how to actually get the return completed. There may be other, so it's not just, so for example, when you are completing your self-assessment return, it's not just that extra bit of income that needs to be recorded. It will be then the income from your job. So you would have had a P60 potentially from your job that needs to be captured on the return as well. Any bank interest that needs to be captured on the return. If you're contributing into a private pension, again, that needs to be captured. So it's not just as simple as you just need to record that additional income. It is everything about your tax affairs that have happened during that year. Yes, through your job, you will have already paid the tax. So again, that's already captured on your return as well. But it's the additional tax that HMRC is interested in, and they will also want to see how much tax have you already paid during the year, while you have been employed in the job. So I hope that helps, and thanks for engaging, Nikki. Our next question is from Harvey. Excuse me, Harvey on Twitter. If you don't have the funds to hire an accountant, is it best to start with QuickBooks yourself first? Thanks for the question, Harvey. Yes, if funds are tight, QuickBooks is a great tool to use. It's our tool of choice as accountants. So we recommend it to our clients. To use QuickBooks to get yourself organized. It's a fantastic tool. It's very, very easy and user friendly to use. very cost effective as well. And it can help you organize all of your financial records. All of your income can be recorded in there, all of your expenses can be recorded in there. You can even use the QuickBooks app to take pictures of your receipts. So throughout the year, if you're doing that on a regular basis, you will have all of that data captured in one area. Obviously, you still have to know what you're doing in terms of recording everything in the correct areas. It goes, there's always that saying, if you feed crap in, you'll get crap out. Excuse the French, sorry. So be mindful of, QuickBooks isn't a magic bullet, but it will certainly help you get your affairs in order. So yes, and thanks for engaging, Harvey. Our next question is from Corinne on Instagram. How will HMRC know if we do something wrong in our self-assessment? I am super scared about investigations. I hear they can be pretty horrible. Corinne, you're not wrong. So HMRC they won't know as such. So, for example, they rely on you to report your additional income. But they have parameters that they have set, so for example, if you're a hairdresser, they'll expect a certain percentage of profits that you'll make. If you're a driving instructor, they'll, again, they have these metrics in the background. So, they'll have an idea. And if something looks unusually odd, it could flag up on the system, or you could just flag up randomly on the system for a random investigation. Yes, unfortunately, investigations do happen. And I was actually at a conference with HMRC a few years ago, and what they stated was for every £1 they put into their investigations team, they actually generate a £12 return. So this was several years ago. So, so the more money that HMRC invests in their investigation team, the more money they actually seem to be pulling in from people having submitted wrong information on their tax returns. Best thing to do, though, is keep all of your income receipts, keep all of your expense receipts. And then, if you are submitting it yourself, then, make sure that, you've captured all of the income, all of the expenditure, you've got all of those records. You keep, keep those records on hand. There is a requirement to keep those records on hand for 7 years. But if you're not hiring an accountant, that is probably the best advice that I can offer. If you are super scared about the investigations, I would say, speak to an accountant, maybe see if you can engage their services. If funds are tight, it could save you a potential penalty in the long run. And also, any good accountant will obviously offer you, potential ways to save tax as well. So you might not be recording all of your potentially claimable expenses. So for example, everybody's been working at home through furlough, through the lockdown. So people can claim use of home allowance. You might be able to put in potentially part of your mobile phone expenditure if you've been calling, using your personal phone to call clients. So, there's things like that where accountants can add value. And so, yes, they'll be charging a fee, but they, generally will, all the services they provide and the advice they provide normally outweighs the fee they charge. So it's always good to have an accountant on board. So I hope that helps, Corinne. Thank you very much. Our next question is from Pedro on Facebook Messenger. Hi, Pedro. His question is, as we literally had to work from home for basically 9 months out of 12 during that period, are we able to claim some of our household bills as part of our self-assessment? I am thinking electricity, gas, internet, possible mortgage too. How much of it are we allowed? Right, Pedro, thanks for the question. So there is a rule of thumb. So basically, HMRC have allowed you to claim £6 a week from working from home. So that is £312 over the year. And that will cover the cost of electricity, gas, internet, and potentially, part of your mortgage too. It's not a lot, but that's what HMRC is offered. And so I hope that helps. And if you are filling in the return yourself, it can go in the other section as a use of home allowance. I hope that helps. And thanks for engaging, Pedro. Our next question is from Finn on Instagram. Hi, Finn. So he says, I'm a freelancer and trying to get my head around indemnity insurance. What is the difference between that and public liability? Is it even really needed until I have more clients? Right. So with indemnity insurance, it depends on what type of freelancer you are. So, for example, we as an accountant have indemnity insurance. So, for example, if we do something wrong, then a client potentially has a claim against us. And then they would they would say, well, you did this wrong, and then we would claim on our insurance for that. Public liability is if you're going into clients' premises and you end up knocking over an expensive vase, or you end up injuring somebody in the process. So public liability is if you look at the insurance quote, it's actually quite cheap to have, but it depends. If you are actually traveling to client premises, then yes, I would suggest getting the public liability insurance. But if you speak to the insurance companies that are actually offering this, they will explain in more detail about why you need that insurance and if it is required for yourself. So if you explain your processes to them, they'll be able to tell you in more detail. But it's not a case of getting it when you have more clients. It could be a potential claim could happen with your first client, Finn. So it's important to actually have it in place. Better safe than sorry. So thanks for engaging, Finn. Right, our next question. Oh, I'm busy this morning. So it's from Bianca on Facebook Messenger. Hi, Bianca. So she said, I've been self-employed for several years and have got used to doing my self-assessment. However, last year, I also began renting out a property. How do I include the two income streams on my self-assessment? Basically, when you're on the HMRC website and you fill in the initial tick box section to say where your income has come from, there'll be a section that says, have you rented out any properties? So in that section, you'll tick the box that says, I've rented out a property, and then a separate section will appear, or HMRC will ask you questions about that rental property. So how much has your rental income been? What has been your, what expenses have you incurred? And things like that. So there will be a separate section, Bianca, on the return that will appear, as long as you filled in the correct boxes. If you can't find it, call up HMRC. They will, guide you through the process. So, there is a helpline available, and you can actually get through to them on the phone. The wait times are very long. So, potentially you could be waiting an hour on the phone to actually get through to HMRC. As you can appreciate, it's the busiest time of the year for them, especially today. But if you persevere, you will get through if you can't find the button. Thank you very much. So next question, we have Saeed on Twitter. Hi, Saeed. You mentioned we may be able to claim money back if we've been taxed too much. What circumstances is this, and how do we know if that applies to us? Right. So, for example, if you have been, thanks for the question, Saeed. It's a very, potentially very generic question, but I'll try and help as best I can. So let's assume you've been employed in a job, and you have, HMRC's had you on a certain tax code, but they may be taxing you too much, and that tax may not have been corrected through the PAYE system. So hence, you have been potentially overtaxed. And then, there are various calculators online. So, when you get your P60, you can always go online, put in your tax year, put in the tax code, put in the amount of salary you've earned, and then you will see roughly the amount of tax you should have paid. And then if you have overpaid, then there is a potential claim back for you. Or it can also happen, for example, if you've been employed in 2 jobs at the same time during the year. You may have been overtaxed during that period, and then when it gets to the end of the year, you can actually potentially claim money back from HMRC. So I hope that helps, Saeed. And potentially you can also get in touch with HMRC as well. They will have on file if there is any overpayments you've made, and if they're holding a credit for you, you can potentially just give them a call as well on the general line, and then they'll be able to let you know. Moving on. So Fareem on Facebook Messenger. Hi, Fareem. Is there a minimum amount I need to earn outside of my day job before I need to complete a self-assessment? I've made less than £650, but someone told me that everything I earn needs to be declared in one way or another. So Fareem, you're in luck. So you've made less than £1,000. So from your perspective, you don't need to fill in a return. Because it's less than £1,000, you're okay. So yep, you can rest easy this time. If obviously, during the next year, that £650 becomes more than 1,000, then you will need to register yourself for self-assessment. Also, you can easily call HMRC, for your own comfort as well, and then just say, look, I've earned this income. It's £650 or less than £650. Do I need to fill in a return? They will give you the same answer and say no, more than likely. Moving on. So we have Nick on Twitter. His question is: set up a new business checking account and got a cash reward from the bank. How should we categorize this in QuickBooks? It's just a one-off. Right, thanks for the question, Nick. So that would go under other income on QuickBooks. So if the category isn't there, you can actually set the category up. So you can classify it under other income. I hope that helps. Thanks, Nick. Next question, moving on. So we have Mia on Facebook Messenger. Hi, Mia. So her question is: I have a day job, but I set up a company to run a series of websites in 2020. We make money from AdSense, like a couple of £100, which literally goes into a bank account that covers running costs. I literally take no money from it. Do I still need to do a self-assessment? Right. Thanks for the question, Mia. So if you've earned just a couple of £100, then I set up a company to run a series of websites. Right. If you've set up a limited company, then you will actually have some legal obligations there, Mia, to get a company tax return or company accounts submitted, a company tax return. And otherwise you will actually end up with potential penalties. If it's not a limited company, and if it's just a sole trader company, which you registered with HMRC, then having earned just £200, you won't need to. Well, actually, if you've already declared to HMRC that that you're running this company, then it's better giving them a call to explain the situation, to say, well, the company's only made a couple of £100. Do I still need to fill in a return? They will then either take you off the list and say, no, you don't need to, or they will say, well, yes, fill in the return because they've already sent out that request. And then next year that you won't need to, potentially, because you haven't earned enough. But if it's a couple of £100 a month, then you will go over that £1,000 threshold, and then you will need to actually submit a return for that period. But be careful, because if it is a limited company, if you don't submit anything, then you will actually end up getting a penalty from Companies House, a penalty from HMRC, and those penalties will keep growing as well. So it's better speaking to an accountant to actually get those company returns filled in on time. And given that it was set up in 2020, you may be coming up to the 1 year, as in the annual deadline. So from once the company year end has passed, then you have 9 months to actually get your return submitted. Great, thank you so much, guys, for the questions, and thank you for engaging. I hope my answers were helpful. As I mentioned earlier, we did have a poll running, and the poll results are in. So we asked you, have you submitted your self-assessment already? And the results have revealed that 60% of you have said yes, 10% of you said no, and 30% of you answered working on it. Yep, it's always, you always do get a few who leave it to the last minute. So I'm quite surprised, actually, there's still 30% outstanding. But good luck to you guys. It is the last day of the month, so I hope you do get it in on time. But as we mentioned earlier, you have got extra leeway this year with HMRC, but do try and get it in on time still. And so I just want to thank everybody for tuning in. If you want to get in contact with me, you can email us at quickbooks@morganreach.com or visit our website, morganreach.com. Coming up on Ask the Expert tomorrow is a franchise advisor, Sean Goldsmith from Grow Global. Tune in to get strategic planning and franchise advice. A reminder that if you need any more advice, join the official Intuit QuickBooks small to medium-sized business community on Facebook, where accountants and business experts are on hand 24/7. I've really enjoyed answering your questions this morning. Have a great day. Thank you very much.